But I think one thing that's really allowed us to be successful is being creative problem solvers. Certainly when you're owning a physical real estate, even if you're buying turnkey.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome to today's episode on Wealth Strategy Secrets. Today we're joined by Zach Lemaster. Zach is the founder and CEO of Rent to Retirement, the largest turnkey real estate provider in the world. He is a seasoned real estate investor who has accumulated a large portfolio of rental properties across multiple markets, including single-family, multifamily, commercial, and new construction. Zach is a licensed optometrist who practices on a volunteer basis. Zach started investing in real estate while working as an optometrist and captain for the U.S. Air Force. This eventually allowed him to retire early from his career in medicine to be a professional investor by strategically investing in markets that maximize cash flow, appreciation, and equity. Zach, welcome to the show, and thank you for your service, brother.
Hey, likewise, Dave, coming from a previous Marine. So yeah, excited to be here. Thanks for having me.
Yeah, absolutely, and we'll do the audience a favor, and we'll keep the inter-service jokes at a minimum today. But no, definitely appreciate your service, and you know that's a huge cause for me and our community is trying to support those veterans. So, you know, love what you're doing and everything, and you know, why don't we kick off and tell the audience a little bit more about your background, you know, from the Air Force, and how did you even transition into the real estate space?
Absolutely. And I'll try to give the Cliff Notes version to not spend too much time on this, but essentially, Dave, our background is, as you mentioned in the intro, is in healthcare. My wife and I, that is, we met in optometry school in Portland, Oregon. I was on scholarship with the Air Force to pay for professional school. And so I went into the Air Force immediately after school as a captain. I practiced optometry in the Air Force for 7 years. That's where we started investing in real estate. You know, I think once upon a time we read Rich Dad, Poor Dad, and that's, as many people have, you know, kind of got the bug. I've always been interested in real estate, but even my first year in the Air Force, I used my VA loan to buy a duplex, house hacked it, lived in half, rented out the other half, and really just, you know, saw the benefits of real estate. And that was the starting point. And this is probably about 15 years ago at this point, but every year since that year, we've bought more and more real estate. So, you know, that first year duplex, and then the next year we bought some single family and some more small multifamily. And, you know, eventually that allowed us to ultimately replace my wife and I's active income as doctors to be full-time real estate investors. And that didn't happen overnight, but it did happen over the course of many years, staying committed to continually investing. And kind of the crux was where we, you know, learned to invest strategically out of state and diversify across multiple markets where we saw better opportunity that wasn't just in our local market. And that allowed us to really scale our portfolio quickly. And, you know, that wasn't an easy process either. It took many years to develop our teams and systems to replicate across multiple markets. But ultimately, we're able to retire from our career path early in life and replace our income, which I think a lot of people are looking to do. And so that caught a lot of attention from our friends and family and colleagues. They're saying, hey, we're seeing the success you're having in real estate. We want to invest with you, you know, but we don't have the time, the energy, the experience. Like, can we just can give you money, or can we invest with you, you know, or can you teach us how to, you know, invest in real estate strategically, specifically, you know, across different markets, say if their local market's too expensive, or just to find better return on investment. And that was the birthplace of our company, Rent to Retirement, where we help investors actually buy physical properties and build their own personal portfolio. And then fast forward to about 10 years later, where we're at today, we're working across 11 different markets, mainly in the Midwest and Southeast. We sell turnkey products, which I'm sure we'll talk about, but it's really an easy way for people to own real estate, to scale and diversify across multiple markets, where we basically do everything for them, but they get all the financial benefits of property ownership. Last year, we did about 1,000 doors across those 11 markets, and have continued to grow our team. And now this is our passion. So
Yeah, that's really awesome, Zach. And I find that there's just such a gap in the marketplace around, financial education. And even, 20 years ago when, I took the purple pill as well. And, we read Kiyosaki. It was really great conceptually, but, how do you make it work? Right. And, I've been trying to kind of figure that out over the past 20 years, but it's great that, you were able to apply a lot of those lessons that you learned, actually take action, and start that even in your, active duty career. I mean, if that's, I try not to have any regrets in life, but, if there was one area, that I wish I had, doubled down on back then, that was, financial education and getting smarter rather than, giving my resources to a financial advisor at the time. Right.
Yeah, and that's a common thing. We interview a lot of very successful people, as you do in business and real estate in general. And, the common consensus is, or when we ask them, like, what would you do differently? It's usually the answer is, I wish I would have started sooner or been more aggressive early on. I mean, all of us can say that though, right?
Yeah.
The important thing to know is that real estate is a lifelong journey. And just because you maybe didn't invest previously, or you're looking to take your business to the next level, like, there's no wrong time to get started. Real estate is a beautiful thing where it compounds over time, just owning real estate and having a strategic business plan, but it's never late to get started. And, you learn and progress over time. And I think it's, that's a beautiful thing about real estate.
Yeah. Zach, do you have an overarching wealth strategy that you and your wife follow?
So we are, disclaimer, we're very biased towards real estate. That's what we, eat, breathe, and sleep. And that's what we know. I think it was Warren Buffett who said, invest in what you know and nothing more. But we don't do, Dave, any investing outside of real estate. I don't have a 401k. We don't invest in stocks or mutual funds or commodities. And we are well diversified across real estate, both in asset class and location, but we only invest in real estate. And we've evolved our strategy over time, where it's, in the beginning, it was like, okay, let's just continue to grow our portfolio and cover our expenses. And that allowed for some level of financial independence. And then from there, it was continually scaling and investing out of state to be more strategic, to the point where, okay, we can replace our active income, and then eventually scale to, it's like, okay, well, we can actually increase our lifestyle and continue to, increase our income and our net worth through real estate, be a little bit more intentional on our investing, to create generational wealth. And, at this point, we have 7 figures of passive income just from our portfolio outside of business or anything else, which is something I never would have dreamed of, 15 years ago, but it's just staying that consistent path. Specifically speaking, though, a lot of what we do right now is investing in real estate for tax purposes. And that's something that we've really learned over the years, of like how beneficial the tax benefits are, because we're active real estate professionals in the real estate business. Our goal every single year is to buy enough real estate to completely offset our active income. Taxes are the biggest expense we're all going to pay in life. And if you can, defer that or delay it, or ultimately not have to pay that money to Uncle Sam and then reinvest it to actually have a return, a compounding return on over time, that has also allowed us to excel our portfolio. So a lot of what we buy just personally right now is like commercial retail centers. They're low cap rates, but they're very long-term buy and hold stuff where we can, take max tax benefits available today and then reinvest that money. And then also that, in addition to being strategic about the locations we try to invest in, and that ties into our turnkey business of just identifying where the best opportunity is and building teams in those locations.
Yeah, such great insight, Zach. I think it's really interesting too, this like trajectory of growth, right? Because a lot of us who get into this game, we kind of see this, pot at the end of the rainbow, right? Which is, okay, I'm going to achieve financial independence where my income is exceeding my expenses. But it's interesting because once you start to get closer to that, you don't want to be actually trapped by your goals. And I have a term for this I call abundant complacency. Is like, okay, once you reach that level, okay, now you're stuck, but then you stop growing, you stop doing things, right? So you have to continually really make growth as like a capability, right? And a process that you're always going. So, today, I mean, that's amazing. You guys are at 7 figures in passive income. But, what is that going to be like in the next, 5 to 10 years? And you're still, expanding, your entire footprint. So that's awesome.
Yeah, I think, it's, I think a lot of people come into this with the idea, especially early on in their investing career, of like, when you think about retirement, or whether you dislike your current job, or you just want to spend more time with family and on the important things, that's really kind of, I think, the mindset a lot of people come into is like, okay, well, let me get out of this job, right? And it is easy to buy yourself another job in real estate, make no mistake about it. And there's risks and things like this, but we've gone through just like an emotional and kind of mental evolution over time where, yes, okay, we were able to cover our expenses and then our active income, but also, as we become more experienced and savvy investors, we've also maybe, I don't want to say lazy investors, but we've been able to be a little bit more strategic where, hey, we did buy our time back and we can still progress every single year, but not just, we've built a team to be able to help us support that. And that's key. When you're investing in real estate, you're building a business and you need the right people in place. But I think it's our goal now is, yes, to still continue to expand, but also just make the portfolio and business self-sustainable, where we don't have to be in the day-to-day, but we're still actively growing. And again, real estate's a lifelong journey, and I think you're always learning, but certainly over time, as you become a more experienced investor, you can be a little bit more strategic where, you're getting the money while we call it horizontal income, where, you're laying down and sleeping and you're still earning income on it. And that's, I think, a great thing that real estate allows. But this is our passion. And, we love helping other people accomplish the same thing. That's the reward now. That's where we're at now. It's the same thing with optometry. Instead of actively practicing, it's not because we didn't like optometry. I love to help people see. That's a passion of ours. But we've been able to do that on a volunteer basis. We run our business helping people also accomplish passive income. And that's like the active reward for us. And that's what kind of keeps us going in it.
Yeah, that's really great. And I think there's a really important distinction. A lot of people who are kind of navigating this space as well. There's a distinction between active income and passive income, right? And, just like you said, you can buy a job, right? So sometimes the allure of getting into real estate investing or turnover of assets or passive income kind of thesis, can be so exciting to people that like, hey, this is all I want to do, right? But I think the first consideration you really need to make, as an individual is, does it align to my purpose? Right? What is really my purpose that I want to have? Because that's what gives you freedom when you wake up every day and you're completely excited. Now, folks like yourself and me, like I live and breathe this. I love this. It's a puzzle. It's the game of chess. It's capitalism at its best. So I really enjoy it. But also if you're really good, like say, you are an optometrist and you're great at it and you absolutely love it, right? Then, passive investing really makes sense for you versus going kind of the active route where you just kind of replace the job, right? And that's what I think is so great about, your business model with build to rent is that, you're able to give people these truly passive type of opportunities so they can focus on what they're great at, right? Because you have to take into consideration that opportunity cost.
100%. And while you and I, Dave, are, we're all in, right, on real estate, that doesn't mean that that's the only way to go. I mean, there's so many different ways to invest in real estate. And there's a lot of gurus out there that will teach you, flipping and wholesaling and ways, but those are other jobs. You're replacing one job and often maybe even a job that doesn't pay as well as just your current job. There is nothing wrong with staying in your profession. We have a lot of investors that are engineers, doctors, attorneys, accountants, and, or just, blue collar workers that are just, hey, they just want an easy way to invest in real estate because they see, whether it's a diversification thing for them or they see the ability to really take a little bit more control over their finances. That's huge with a physical asset like real estate, is taking control over it. You're not relying on the government, like in a 401k, telling you when and how you can take your money. You can kind of engineer that, but also the simple fact that real estate, through all the different ways, we refer to it as the ideal investment. And that's an acronym, all the ways that you earn income through I being income, D being depreciation tax benefits, E is equity buildup as the tenant pays your loan down, A is appreciation, and L is leverage. So, using all those things combined, like you really can excel your investing and your return on investment much quicker and have more control over it than investing in stocks or something like this. So yeah, there's nothing wrong with, continuing to work your normal profession, but still investing in real estate. And I think a lot of people want to do that. and they realize like, hey, I don't want to be a house flipper. That is a tough job, or a wholesaler, but they still want to have the financial benefits of owning rental real estate. And that's where our business comes in, to help them do that strategically with a team that's established in each one of these areas.
Yeah, so that's a great segue, Zach. Let's talk about your business model, because I think a lot of people might not necessarily be familiar with how it works.
Sure. So turnkey is one of these buzzwords that we hear about all the time, and it's kind of ill-defined. And so we always want to talk about what we mean when we say turnkey. So when we talk about turnkey, Dave, what we refer to is a property that's either been fully renovated or newly built, leased, and professionally managed by our teams in markets that we've identified to be successful investment markets, areas that have things like landlord-friendly legislation, low taxes, population and economic growth, rent ranges, and demand that allows for positive cash flow is a big one, right? I mean, that's, most people want positive cash flow in the rental portfolio, but we've all done all that research and built those teams in those markets where, we have this buttoned up product for someone where they can own the physical real estate. And that is a little bit more active still. It's still passive, but I want to remind people, in this scenario, you're buying the property, right? You're not investing in, say, a fund or doing profit sharing. Like, you're owning the property with the idea that it's going to be generally hands off, and it's in an area that you will likely have appreciation and rental growth, where we handle everything for you. So you don't have to be actively engaged in the management in the day-to-day, but you still get all the financial benefits of real estate ownership over time, and we help you scale and grow your portfolio. So that's really what turnkey is. We mainly focus on single family and small multifamily. As you mentioned, we also have the build to rent products, which I think are, especially right now in today's market, an exceptional opportunity, where you can come into a brand new built house that will have zero maintenance and 10-year warranties on structure and things like this, that will have strong appreciation and have rental demand. And you likely have immediate equity coming into it as well that you can refinance later or sell it again. But the goal is to really offer those products to match it with the goals of the investor. We always want to get on a call with every single person to talk about your goals and experience, your timeline, your resources, and help map out a strategic investing plan for you based on your criteria. So we can look at, what markets do we want to invest in, what type of asset classes, and then offer a comprehensive approach to assisting our clients in building a business. Because again, you're building a business in real estate, you need to have the right accountants and CPAs, so you can take those exceptional tax benefits in real estate. You need to obviously have good property management, the right insurance, the right lenders in place. And so we try to build long-term relationships with people and offer this kind of comprehensive approach to helping them build their passive income portfolio. Yeah,
that's great. And let me ask you this question, right? If someone wanted, let's say someone built up a little portfolio, maybe 3, 4, 5 units with you in this turnkey model, could that potentially qualify them as a professional real estate investor?
So, not being an attorney or CPA, as a disclaimer, yes, it would always be good to consult with them. But there's a lot of different scenarios. That would be a goal, I think, for a lot of people. Especially if you're in the scenario, say you're still working your W-2 or your profession, and you want to continue doing that, but you have a spouse, say, that's not working full time, or that can potentially jump into that business. It's harder to qualify for someone that is working in their active position. We have people that have qualified with no problems, but you just need to meet certain thresholds, right? You need to have 750 hours dedicated to investing related activities. You need to have material participation on your portfolio of 500 hours a year and certain things like this. And usually, once you have a portfolio of multiple rentals, maybe even diversified across a couple of different locations, even having a property manager, there's maybe a likely scenario where you could qualify as a real estate professional, or, as I mentioned, have a spouse, that could qualify for that. And that opens up the door to significant tax benefits, just like we're doing in real estate, where you could potentially, the goal of doing that would be able to offset your active income with your real estate losses, take accelerated depreciation on those. And there is a likely scenario that even if you're, working in, say, healthcare or whatever, you can offset all of your active income. Say if your spouse is a real estate professional and you're taking accelerated depreciation losses against your active income. Just like with our goal is to reduce our taxable liability significantly, or to zero, every single year, just by buying enough real estate. And that's huge, right? Because that could be another 40% of our income that is applied to actually investing and earning a return. And that really accelerates stuff. So that's a very long answer to say, yes, it's possible, Dave.
Yeah, no, I mean, reducing your taxes is massive, right? It could actually be a higher yield than the investment itself.
Absolutely.
When you look at the whole thing, which is why we like to talk about really having a comprehensive wealth strategy when you're understanding things from an end-to-end perspective, and how can you impact something, downstream when you make a change here. But it's a really interesting strategy, Zach. I mean, I know we have several investors in our mastermind community that have done that, right? Their spouses have qualified as a real estate professional. But I was just thinking, right, one of the things that holds people back about being a real estate professional is, it's this whole concept again of the active versus passive. It's like, okay, well, which market are we going to select? So people typically go to the markets that they live in, or they can drive 1 hour to. So they miss exposure to, strong markets is one thing. There's so much competition in the space. So if I was to go out and buy a property on my own, I'm competing against someone like you, who's got an entire professional team. You've been doing it for the past 15 years, and all the assumptions, the growth rates and things like that. So it could be really interesting, right? A little bit of this like hybrid model, right? To leverage you guys, right? It's kind of that who, not how principle, right? If you guys can actually identify the property, you're doing all the turnkey items that nobody wants to deal with: tenants, termites, and toilets. So you manage all of that. But then if you have a bit of a portfolio to that, there's still some overall management that needs to take place that I'm not a CPA either, but it would be something worth exploring with your, tax advisor if, it could be a good strategy.
One thing that we've found, and I love that everything you just mentioned, Dave, I think we'll steal the term of tenants, termites, and toilets as the 3 T's from you. But I think that, looking back over the past 15 years of our investing career, really what's allowed us to get to the point that we are today is not doing anything complicated or out of the ordinary or creative. We've done a lot of different creative, financing and, like I said, flips and wholesale. We've done it all, but really it boils down to ultimately just building a portfolio, right? And owning real estate over time and letting time do what it does with appreciation and debt reduction and leverage, especially in a high inflationary environment. And using your investing strategy appropriately in real estate and just owning real estate over time. And it's crazy. We always talk about how real estate investing, it's not a linear graph of progression. It's an exponential graph where, yes, it's maybe in the early years, it's slow because you got to save up your down payment and buy another property and save up another down payment, maybe bring in a partner or use a HELOC or something like this to expedite this. Like, these are all strategies we work with our investors on. But there is a point where you build up, and this is a common path a lot of our investors follow, where they just own real estate for 5 or 6 years or whatever the case is. They let the tenant pay the loan down. They let the appreciation and the rental increases on these properties happen. And they have equity in the property after a few years of ownership where they could potentially 1031 exchange and grow their portfolio 2 or 3 times without having to inject any more capital. And it is a cool point where you see this exponential growth where your real estate is buying real estate. And you get this compounding effect. And that's just a really cool thing to see over time. But that doesn't mean, just owning, just investing and consistently doing that year after year is really where you're going to, I think, excel. But it doesn't happen immediately. It doesn't happen overnight. You just got to stay the course.
Yeah, I think the slow and steady approach always wins, right? And that is what the top 1% are doing, right? Buying assets, buying cash flowing assets that are tax advantaged, and you just keep, rinse and repeat, and it continues to, exponentially compound. So Zach, can you walk us through an example, right? And also talk about the financing, at what level do you guys kind of get involved in that? But just walk us through a typical example.
Sure, absolutely. So what we're focusing on is your B and A class type of assets, mainly single family or small multifamily, so 2 to 4 units. When we talk about B or A class areas, these are areas that are kind of median home prices. You have the most tenant, the largest tenant pool to choose from of people that are market rate tenants, where they, have sustainable income and things like this. That's just a really predictable way to keep your house rented, which is important, and have high rental demand, but also balance being able to cash flow well on the property. Generally speaking, these home prices, I mean, in the Midwest, average home price is $150,000 for a B-class asset. And, a lot of people, depending on where you live, may say, well, that's a down payment on a house in my market, but we do have a lot of people that invest, that are, say, on one of the coastal areas where, they don't have the tax advantages and the tenant laws. But in addition to that, real estate is just so expensive. It takes a significant amount of capital to buy one property that may not even be positive cash flow. Whereas they could take that money and buy a whole portfolio using leverage in some of these areas. But generally it's a, $150,000 house in the Midwest. If we're looking at new construction, like build to rent stuff, maybe more in the Southeast where we focus on, like Florida is one of our best markets for new construction. That's maybe like a $300,000 house. That's probably worth $350,000. So you have a little bit of immediate equity. You're putting 20% down on it. Likely the cash on cash return using financing, if we're assuming a conventional loan, is, maybe you're a 10 to 15% cash on cash return between, one of those locations. So yeah, $150,000 to $300,000 price point, maybe an average of a 10% cash on cash return, where say that $150,000 house may cash flow you $300 a month after all expenses and debt service is paid. When we're talking about financing, it's really, it doesn't matter to us what type of loans you use. We just want to give you as with our discussions with you, give you the tools you need based on your scenario. If you can qualify for conventional loans, you can have 10 under your name at any given point in time. This is your Fannie Mae, Freddie Mac loans where we put 20% down on single family or 25% down on multifamily on a 30-year fixed loan. Fantastic. That's what most people do. And we have lenders that are licensed in all these states, so we can make available to you. If you're someone that's self-employed or you don't want to go the conventional route, we have non-conventional or portfolio or non-QM money available, where it's like asset-based lending, DSCR loans that are, it's looking at the property itself and underwriting the property. We have people that are investing through their self-directed IRA or solo 401k where they use a non-recourse loan. We have international investors where there's financing available to them. So I would say most people go conventional, but our goal is to provide you with as many lending resources as we can based on your scenario.
Got it. Okay. So you facilitate the discussion with the lender. So you could create an asset-based loan, right? Which is based upon, the value of the asset, the cash flow that's going on. So it doesn't affect your own credit score. You could put it into an entity, right? And run it that way, right?
Yeah, absolutely. And that's a good discussion too, just as we were talking about helping people build a comprehensive business plan. We have real estate specific attorneys and CPAs that help you to decide on what the legal structure is that's most appropriate to hold the asset in. And then of course, making sure that you have a CPA that's familiar with owning a rental portfolio that's out of state potentially or diversified across a few different states, making sure that you're taking the depreciation appropriately and all the other tax benefits that come alongside with real estate. So our goal is to provide our clients with all the resources they need to be successful, in addition to having a property that's fully rehabbed or newly built and managed by our teams in these areas.
Yeah, for sure. And can you tell us a little bit about the market right now from your perspective, right? So obviously, rise in interest rates, inflation is going on right now. So has it changed any of the dynamics in your model or the markets that you go after or the underwriting?
We could probably spend a whole day talking about this with all these different aspects, but the market is always dynamic. I'll start with that the market is always changing. Over the past few years, a lot of people have gotten too comfortable with these historic low interest rates that we likely will never see again, and using that as a norm. But we should understand that is not the norm. And, so really our investing criteria does not change. We look at the fundamentals of real estate, being an area in the path of progress where there's people coming in, new jobs created, diversity of industries, where you're seeing rental growth and still appreciation. And the market right now, it's an interesting time because, just because of supply and demand, we have a lot of people, so many people that either bought properties or refinanced into these low interest rates. They're not selling those houses, right? Likely, unless they have to. So they're holding on to those loans. So the inventory, you don't see this ton of new inventory on the market. So buyer activity has slowed, but there's still an extreme demand. A lot of the markets we try to focus on are areas that are consistently growing in population. For example, Florida that we mentioned with the new construction stuff, Florida had the highest percentage growth last year out of any state. Texas beat them on numbers a little bit. We also invest in Texas, but Florida seems to be a little bit of a better location for cash flow because taxes are lower. But, we're looking at areas that are still in the path of progress. Yes, interest rates are higher, and that's just something you have to factor in. But being in an area, let's say, okay, you're looking at a $300 cash flow, and now with a higher interest rate, if you're using a loan, it's $250. Like, that's okay. And just know that you're going into an area that, may have 10 or 12% rental increase year after year. So even if your first year is a little slim, year after year, rental increase should dramatically increase, but your loan payment stays the same, right? And so and also that house is appreciating, you're taking the tax benefits on it. And then if the interest rates do drop to the point where it makes sense to refinance, you could do that and increase your cash flow. But the market is still strong. We've seen stuff slow down in terms of inventory availability. We've seen investor activity slow down a little bit, but again, where we're at just with the 2017 Tax Act, now with the cost seg studies, these tax benefits are still dramatically important, and we still see a lot of buyer activity. People still have capital to invest. And in the markets where we're investing in the path of progress, there's still extreme demand. Like, yes, the market slowed a little bit, but it's still, there's still a lot happening. There's still high demand for rents and resale. And so I think just being ultra strategic and intentional on where you're investing, especially in like today's market, is really important. We're seeing this kind of mass exodus of the West Coast for a lot of different reasons, cost of living, maybe politics, maybe, the tax structures there. And so being in areas that are up and coming because of what's happening in the market shift right now is extremely important. But going back to the fundamentals of investing where you have positive cash flow and your underwriting makes sense to be in an area where you'll see increased demand over time, and I think you can't go wrong.
Definitely. And Zach, I mean, you've accomplished so much, including your Air Force background, becoming an optometrist, and now building a real estate, empire. Really, what would you say has really contributed the most from really a personal development perspective that fuels your results?
We've always and I said this earlier, Dave, but we've always just stayed consistent. And it's not always easy to do. Like every single year since that first duplex that we've bought, our goal is to buy more and more real estate, whether it's number of doors or overall portfolio size, every single year. And so far we've stayed true to that. And even this year we'll continue to do that. But we've just really stayed consistent, and that's been a battle, right? I mean, there's all sorts of challenges with growing a portfolio, and by no means if anyone's looking to invest in real estate, do you have to continue to make this a full-time thing? Like, maybe your goal is 10 or 20 houses, maybe it's 5, maybe it's, $3,000 of passive income, maybe it's 10, that's all a dynamic process. And there's always obstacles that come up throughout. But I think one thing that's really allowed us to be successful is being creative problem solvers. Certainly when you're owning a physical real estate, even if you're buying turnkey, like you still will have tenant issues. Granted, you'll have management to help you take care of those, but you need to understand like there will be tenant issues at some point in time, and you try not to lose sleep on those things, but problems come up, and it's just being able to focus on the end goal. I think for us, what's really kept us in this game is the simple fact that we're passionate about real estate, but we're also passionate about helping people accomplish their goals. I think that comes from maybe a little bit of bedside manner in the healthcare setting, where that's important to us. That's what keeps us going, because we don't have to work in this business, but we enjoy doing it because we like to see results. We have a lot of people where they buy turnkey, and I think one thing I'd like to mention just as a side caveat here is like who is turnkey right for? And what we found is there's a broad spectrum. We have newer investors that simply need some handholding to invest for the first time, or they're the first time investor out of state and they want to tap into an immediate network there. They don't know where to start, or they don't want to take the time and energy. We have a lot of people that are full-time, in their profession, and they just want to buy real estate, and that's great. And they'll continue to buy with us. We also have people that are active real estate investors that are doing flips and have these large businesses, but they also need to, for tax purposes, maybe they need to tap into an area where they can just buy more. They can simply just buy more real estate and hold on to it for the long term. And so it really depends on you and your goals, but allowing people to accomplish their goals and seeing, the results that they're working on. I mean, that's really what's been rewarding and remotivating for us to stay in this business. We have a lot of people that maybe started out buying turnkey real estate. They kind of learned the ropes. They took some tools that we were able to show them on, how to evaluate markets and build a team and proper management. And then they go on to do their own thing and build a large portfolio. And that's cool to see them come back 10 years later and say, hey, you guys gave me the framework to do this. And that's just been really cool to see over time and remotivating for us.
Yeah, definitely. I think there's such a gap, right? People being interested in trying to get into the asset class, but there's so many things kind of holding them back. They have got limited time, raising families, have a W-2 job or something, but how do I get into the asset class? And like I said, I mean, you're facing, so much competition. You're kind of limited to some of the market. And you don't want to spend your time doing tenants, termites, and toilets, right? So, so having, leveraging your model, and I like your acronym as well, early on, right? Trying to get leverage. And it's not only leverage of, getting bank debt, right? In real estate, it's also leverage of people. Right. So if you can work with Zach and his team, you're completely getting that leverage from all the years of experience they've had and how to do everything turnkey.
Absolutely. I couldn't agree more.
Yeah. So Zach, if you could give listeners just one piece of advice about how they could really accelerate their wealth trajectory, what would it be?
If you're a newer investor and you haven't taken action yet, and you're reading all these books, listening to podcasts like this and educating yourself, that is fantastic, but you can only do that for so long. The best knowledge comes from firsthand experience. That doesn't, again, mean you need to be in there changing toilets and be a property manager. Your time is better spent on your business than in your business and building it. But I think that, just taking action, however that is, and just staying consistent to that again, that's been the number one thing that's allowed us to success. We've lost a lot of money in real estate doing a lot of different things, but the simple fact that we've been able to invest and consistently take what we've learned and continue to apply that and grow. I think for a newer investor, it's taking action. Set yourself a timeline. If you haven't bought your first property yet, next 90 days, set a goal. If you have the financial capability, there should be nothing stopping you. Build out a criteria, but understand goals and criteria change over time, but just buy something and get in and learn it. If you're an investor that's maybe, has a portfolio or has in the past, or you're looking for different ways to grow and you're finding local challenges, like look at other markets, look at other locations. It's very unlikely that your local backyard is the best strategic market to invest in. And so be open to other locations and learn about those locations. And if you need an opportunity to tap into a team or to help guide you on market data and things like that, we're here to assist. That's the purpose and mission of our business. But diversification is key. And I understand that it can be daunting to invest out of state, but if you're tapping into a team that's already established, the diversification, investing outside of your local market is probably the sole thing that allowed us to excel at the rate we did, is not just being narrow-minded in our local backyard.
Yep. Awesome. Zach, really appreciate your time today, giving so many insights to the audience. I think this has been super valuable. So really appreciate it. And if people want to learn a little bit more about you and what's going on at Rent to Retirement, what's the best place they can reach out?
Probably start with our website. That's renttoretirement.com, renttoretirement.com. They're welcome to call the 800 number. That's 800-311-6781. But I would certainly start on the website. We've got a lot of market data on there to show you kind of what's happening on a global spectrum, but also individually in the markets that we focus on. We put out a lot of educational content in terms of blogs and podcasts and YouTube videos. We're here to educate people really on all things real estate, regardless if you're investing with us or not, because we're passionate about real estate and we love it. So our website has all our social media links, has a ton of education. If you're interested to schedule an appointment with our team, we don't charge anything to work with our team. We make our money through the sale of the property and rehabbing or building the properties. We don't charge the client anything to work with us. We always want to start with an introductory call with an investment strategist to just talk about the markets. Even if you're just interested to talk about where are the markets today, we're happy to spend the time with you. And you can find all that information at renttoretirement.com.
Awesome. Thanks again, Zach. Really appreciate it.
Dave, it's been a pleasure. Thanks so much.
Yeah, you bet. Until next time.